Welcome everyone. Hello and thank you for joining us today for the kickoff of our FinTalks webinar series. The webinars ahead will feature trending topics and prominent speakers from our FinTech Bay ecosystem. We are in some of the most challenging times of our generation with the global pandemic spreading rapidly. Governments around the world are announcing multi-billion-dollar relief plans aimed at circumventing a seemingly imminent financial crisis. And in parallel, hackathons and accelerator programs are springing up daily around the world to rapidly develop practical solutions to issues that governments as well as the private sector are facing today, such as blockchain and AI. Technologies such as blockchain and AI will have a big role to play in distributing relief and in setting up early warning systems that track and trace the spread of the virus in real time. My name is Susie Zira, and I'm Head of Communications and Events at Bahrain FinTech Bay. And today we have with us Matthew van Nieuwkerk, who is the founder and CEO of Settlement, which is a leading provider of blockchain solutions in Europe, Middle East, and Asia Pacific. Welcome, Matthew.
Thank you.
And we also have with us Dr. Hilal Hussein, who is a fintech and blockchain professional, security technologist and crypto expert. He's also the senior financial product development specialist in fintech at Islamic Research and Training Institute, which is a member of the Islamic Development Bank. Welcome, gentlemen. Thank you for being here today.
Thank you very much.
Matthew, I'll hand this over to you.
Okay, thank you so much, Susie, and thank you so much to everybody who's joined us today for the webinar. What I wanted to start before we dive into the specific use cases that we're focused on today, which are looking into helicopter money, but also privacy protecting early warning systems and tracking and tracing systems. I wanted to just provide just a very short state of affairs with blockchain technology. So of course it's gone through its hype cycle, I would say, where now we're starting to see a lot more deployment in really production applications. So this is a study by Gartner that has indicated that already 4% of companies have deployed into production. So it's still a nascent number, a nascent technology, but it is expected that adoption over the next couple of years is going to rapidly increase to reach around 50% within the next 4 years. So we're, again, nascent technology that was born out of the last financial crisis. And I'm optimistic that it will play a role in helping us in the one that's about to hit us, or that in many places is already hitting us. Just a very short introduction to what Settlement does, so you can place a little bit, let's say, my knowledge in the domain a bit better. We're at the dawn of a new, I shouldn't say at the dawn, we're at the 10-year mark of a new technology, Web 3.0 blockchain. And what Settlement aims to do is to make adoption of the technology easier for every developer and organization that wants to utilize the technology. So what, when the technology wave of the personal computer came out, there were a lot of underlying protocols that made it, that were very powerful, but it wasn't until operating systems were developed that those underlying protocols were made useful for other applications like building computers or different electronics or mainframes for that matter. The next wave got started in the 50s and 60s and 70s, but a lot of in the early days, the technology was not really accessible. It was kind of, let's say, confined to academics and military purposes. So you had protocols like TCP/IP that were in the early days developed, but not very useful for mass market until browsers came around. When browsers were made available and accessible, that made it possible to build all kinds of different applications on top, e-commerce, search, social media, for example. And so what the operating systems did for the PC and what browsers did for the web, Settlement's technology does in the blockchain space. So we act as, there's several layers of abstraction in our solution that make it easy to build asset tokenization use cases, to build identity management use cases, and to build supply chain use cases, for example. But without further ado, we're going to zoom in now on the use cases that are the topic of today's session. The first is helicopter money. So this is not a new concept. This is something that I believe it was Milton Friedman, the economist, who came up with the concept back in the mid-50s as a way, or let's say at that time, a theory on how government could distribute money effectively in the economy in times of need. And we are indefinitely a time of need. So what we see as an impact of the coronavirus, the containment efforts that are happening globally, these are the numbers for expected impact on GDP for 2020. So we see China, which was earliest hit, is expecting a 20% slowdown in GDP, all the way through to Germany, which is closer to 30%. So there's, the impact is going to be very broad. We're starting to see signs of it already in the real economy, and it's not looking terribly bright for an early exit. As a result, governments around the world have been announcing stimulus packages that to, let's say, prevent a deep depression type scenario, and to provide funding to individuals and to businesses that need those funds to get through the crisis. So in the US is the biggest package that's been announced. It's around 2.3 trillion. So these are figures as of the 6th of April. So some of them are likely outdated already. But in Bahrain, a 15 billion US dollar package has been announced, including relief for example, paying electricity bills. But that's just one part of it. There's the UAE has announced a $70 billion package. Saudi Arabia, 21 billion. But it's across the board and around the globe. There's a lot of stimulus packages and aid packages and relief packages that are going to be distributed in the let's say the next 6 months, 8 months towards a year, and in some cases even 18 months down the road. So the question, I guess, once these packages are announced, is what's the most efficient way to get that money into the real economy to stimulate economic activity? And that's where, if we look at how let's say what took place in several waves, including during the last financial crisis, was what they call quantitative easing. So since then, we've been through a couple of rounds of quantitative easing, and that's essentially where the central bank creates money. They use that money to buy bonds from financial institutions or from countries, which in theory reduces the interest rate, and that would lead to businesses finding loans more attractive and borrowing more. So then they ultimately spend more and create jobs, and that then has a spillover effect of boosting the economy, of course. Now, I want to be a bit critical here, so I say that up front. But let's have a look at the QE approach and what that's meant over the past several years and several decades. So central banks creating money. If we look at what's happened with the purchasing power of the US dollar since the Fed was created, we're, I think, at $100 US in 1913 would now buy you less than $2 worth of goods from a PPP perspective, or purchasing power parity perspective. So printing more money leads to a very clear trend in what happens with the buying power. And that's, of course, this is another way of saying inflation. So they use that money in a quantitative easing to buy bonds from financial institutions. And that creates other, by putting middlemen in the middle of such transactions, it creates other types of problems that we can encounter as an economy. And with the idea that those banks will, the interest rates will decrease, driving demand for loans. In the current context, if we go back, if we go back 10 years, when we had the last financial crisis, of course, interest rates were not at zero. So it made a lot of sense. You can drop interest rates, and that would lead to more attractive loans and so forth. However, with several rounds of QE behind us, we're in a situation in most countries where interest rates are currently at near zero anyway. So the question becomes, how low can you go? And when how can you go to negative interest rates, which some countries have done? But what impact does that actually create for the business community in borrowing? Now, when we look at banks' lending processes, and in times like we're in right now, there's a critical need for speed. If you look at the jobless numbers in the US market, for example, they had records in the last two weeks. 2 weeks ago, 6 million people filed for unemployment insurance. As of last Friday, they're closer to 10 million people. But to put that in context, on an average on an average reporting period, they have around 300 to 400,000 unemployment claims. So people are losing their jobs today, not in the 2 to 3 months that it takes typically to get a loan. So the relief that's needed is needed now, not in 3 to 4 months' time or even longer. So then, of course, the next step is that companies start spending money. And that's yeah, the money goes into the real economy, paying wages, paying salaries, and buying supplies from suppliers to sell in the market and so forth, to boost the economy. So if we look at a recent study out on last week from the Boston Consulting Group, looking at the demand recovery scenarios that they are forecasting at the moment. They say there are 5 different scenarios. A V shape is the most optimistic one. A U shape, they call a prolonged U shape, which they say is a high probability. An L shape, which is an extended period of low economic growth. And the worst case scenario is a W shape, where there's multiple phases of economic contraction. So when we look at based on money flowing into the real economy with a QE kind of an approach, the expectation is that we're going to be in a 12 to 18 month period before we're recovered. So that will involve on the health side, that there's a slow and gradual decrease in the rate of new cases and of deaths. Lockdowns last for several months, travel is discouraged, and borders are slowly open. So the, the assumptions that lead to the high probability case are, number one, getting money into the real economy the same way we always have. And number two, that the health situation improves in a gradual pace. Now, what I want to, say my perspective is that there's another alternative to get money into the real economy. And that approach is, as mentioned earlier, is known as helicopter money, whereby methods to directly put money into the hands of businesses and to the hands of individuals are implemented. Now, this takes a new approach. We're going, let's say, kind of in a way, bypassing the banks in the distribution of the funds. So instead of a 6-step process, we have the central bank creating money and distributing it directly. So recipients spend more and create jobs to boost the economy. And it's my hypothesis is that if we have more direct methods of getting, let's say, relief and aid and stimulus into the hands of those who will spend it immediately, we can shorten, we can improve the outlook from a prolonged U shape, as BCG has expected as a high priority, a high likelihood, to let's say a V-shaped rebound, which moving from a low to a medium priority, likelihood, and a U-shaped recovery going from a medium to a high recovery likelihood. So there's, I think, by implementing new methods for distributing income directly to the hands of those who need it, those that are applying for unemployment insurance today, put that money directly in their hands, and they will spend it immediately. That will stimulate the economy. Now, that would then optimistically bring the period of recovery from 18 months down to 6 months, but more likely from 18 months down to 9 months. Now, to look at how does how can the distribution mechanism for such a system be set up, this is something that Settlement has worked together with the Islamic Research and Training Institute, which Dr. Hilal is a member of, who's the second panelist today. We were working on such a solution back in 2017 and 2018 as a pilot or POC exercise. And so what I'm putting here is, or what I'm outlining is exactly how that took place. So how we envisioned that system and how we built it back then. So you have, and this is a case study for the Kingdom of Saudi Arabia, where you have GOSI, or the General Organization for Social Insurance. And in such a system, they oversee entitlements, implement social insurance law, and oversee processes. You have also the Gazat, or the General Authority of Zakat and Tax, who assess obligations and for merchants or business to pay taxes, and they collect zakat as well. Beneficiary is the other party. Of course, those are the beneficiaries of the stimulus token that's funded directly to their wallet. And a merchant is one who's eligible to accept the token in exchange for a good or a service. Now, one thing that we built into the system was, and of course, when we are talking about a blockchain-based system, this was built using an enterprise version of the Ethereum network. Could also be built with Corda or Hyperledger Fabric. Any of the predominant permission chains could equally be used. But what we found in the exercise is one of the biggest advantages of moving from a traditional fiat system to a token-based system is that the forms of cash then are extremely programmable. So we devised 4 different types of tokens, and to demonstrate that, and one is would be, I would say, from a functionality or usage perspective, quite similar to let's say traditional fiat or electronic money, being an unrestricted coin. So once I receive that coin, I can spend it for whatever purpose I have in mind. We had a free loan coin, so if there's and that's essentially couldn't be spent anywhere, but so no restrictions on how the money is used. But of course, it needs to be repaid as a loan. We had another coin that we created called a Gessel coin, and Gessel was an Austrian economist who wrote quite a lot about negative interest rates. And the reason that's interesting in a subsidy and stimulus context is that when you're giving aid of any kind, what you want and the intention of it is that it's spent. Now the Gessel coin decreases its value by about 5% every month. So you can basically program the coin or the token so that it diminishes in value over time, creating an incentive to spend it. So the last thing you want is for people to hoard their subsidies. You want that to flow into the real economy, and you can program that into a token. And purpose coins is the final type of token that we created in this exercise. And that's where I can define a purpose for a specific coin. So then, for example, in the case of Bahrain with the energy aid that's being announced, if the only wallet that's able to accept energy coins is the Energy Water Authority of Bahrain, you can perfectly program that into the smart contracts that regulate how a coin flows through an economy. So just to paint a picture of what does such a system look like, you've got the authority that's responsible for setting the rules for entitlement, is responsible for issuing. They then provide that, and maybe I'll go to the next slide, 1 second, to see how does this work from a more of a practical perspective. And what we're able to do in this example is create a circular system for temporary stimulus. So the responsible government agency sets the rules and issues the tokens directly to the recipients' wallets. So all of these parties that are receiving it are uniquely identified, whether that's by a national ID card number or that's via a business registration number, whichever the unique identifier that's commonly used, we would use that to set up wallets for these participants or the beneficiaries in this case. The beneficiary receives the stimulus token directly. Merchants are whitelisted in the smart contract with their wallet. So they're able to accept the stimulus token via QR code scan. And the tax authority, where do they come into it? Well, the merchants then are able to use the token to pay their taxes. So for their VAT, for example, they can pay that directly with the tokens. So what do you have as a result of implementing such a system as opposed to using quantitative easing? Number one, you've got the stimulus is delivered directly. There's full transparency on how the money is distributed, but also how it flows into the economy. And you have compliance up front with all of the, let's say, the requirements that define entitlement. Those are built into a smart contract, so you control for that up front rather than having to audit it afterwards. Another side benefit, I would call it, is that the stimulus is spent domestically. So when I am issuing wallets to recognize merchants, for example, then the recognized merchants are those in my within my borders. That of course has a ripple effect, as opposed to giving a cash aid or a bank transfer or a loan type of a method for distributing the funds, whereby the recipient can spend the money overseas for whatever purpose they have. That won't have a ripple effect from a business perspective on the domestic economy. Might be useful for the other economy where that's supplying goods or services, but it doesn't have a secondary or tertiary ripple effect on the local economy. So of course, by having such a closed loop system where the merchant receives the tokens, he can use that to buy from his suppliers as well. You have also a ripple effect that filters through the economy. And of course, from a practical perspective, at some point, someone will want to take cash out. But of course, you can integrate a fiat off-ramp to trigger a bank transfer, for example. So what we've built back in 2017 and 2018 together with IRTI, in fact, provides quite a reasonable model, I think, for, let's say, developing, deploying the most efficient distribution system that's possible that has a number of benefits to it. So I wanted to share that use case with you as in the context of helicopter money. But I think if we'll take questions based on that.
Absolutely. Thank you, Matthew. Dr. Hilal, I would just like to direct some questions for you. If you could just, hi, Dr. Hilal. Can you hear me? Hi there.
Yeah. Hi, how are you?
Hi, Dr. Hilal. Good, thank you. I just want to, before we move on to the next section, what is the Islamic Research and Training Institute currently working on in response to the COVID-19?
Yeah, thank you very much for asking this question. Actually, thank you very much for giving me the opportunity to present what we are doing in IRTI. IRTI is the Islamic Research and Training Institute, and IRTI is a member of the ISDB, the Islamic Development Bank Group. What we are doing in IRTI is mainly for research and training and information, and FinTech or financial solution development, where we focus on introducing innovative solutions, FinTech solutions using blockchain, AI, to make sure that these solutions are really practically applicable in member countries. In our member countries, we have 57 member countries around the world, aiming to do the proper poverty alleviation and to help boosting up the economy as much as possible. So we worked on very impactful products. In the COVID-19, what we're doing in IRTI, we are working currently, this is only very recently, on a proposal. We name it SDR-based SDG cryptocurrency. It's quite lengthy and complicated, so you might need, some of the audience might be willing to know what's SDG and SDR. SDR is a term, stands for special right, special drawing rights. It's an international reserve asset created by the IMF, International Monetary Fund, in 1969. Its target is to supplement IMF member countries by official, just to supplement their official reserves. So the value of this SDR, which is again the special drawing rights, is based on a basket of 5 currencies: US dollar, euro, Chinese, Japanese yen, and British pound sterling. What we are proposing as a cryptocurrency that's built on top of blockchain technology, with the support of smart contracts, and the proposed currency will be used as a currency for financing sustainable development goals in IDB member countries.
Okay, thank you for that. Also, on that light, can you give us any further details about alternative options to helicopter money?
Yeah, actually, this proposal is mainly not. It's a very good alternative to helicopter money, because we think that we believe in, like, if we restrict the new role of SDRs to really target development, sustainable, really of a very value added to the world economy. In the current COVID crisis, the managing director of IMF, Kristalina Georgieva, she made a statement in 23rd of March 2020, in which she indicated that several low and middle income countries have asked the IMF to make the SDR to make an SDR allocation, as they did previously in the global financial crisis. And currently, the IMF is exploring this option with their member countries. So it's really a hot topic. And the same proposal has been advanced by other financials and financial economists and officials as well. What we are proposing as a crypto SDR that can be injected in the capital of multilateral development banks to support sustainable development goals of member countries. In this manner, the currency will not be used for budget financing, which stand to really depress long-term development of the country.
Thank you very much for telling us. Matthew, I'll let you get on with the next part.
Yeah, sure. Thank you. Actually, very, very interesting stuff, Dr. Hilal. I'm very eager to see how that coming into the market potentially. That's exciting stuff. So yeah, the second topic we wanted to shed some light on today is you know, I suppose the helicopter money comes in let's say, or the distribution of relief and stimulus, whatever form that is, comes as a second phase. The first phase is trying to get a grip on containment, and that's where a lot more work has been done, I would say, at this point in time around the world, and of course starting in China, but of course there are a lot of initiatives going on globally to have a real-time and early warning systems in place that will save lives, full stop. So there's a lot of exciting work being done there, and I wanted to share some insights into some of the ways that it's taking place. So the concept is essentially what is termed contact tracing, and so contact tracing is basically where the idea is that we were able to identify who's infected, who's not infected, and who is unknown. So, and the way that works is that, you know, coming in close proximity with a person that is infected can be done in two ways. You have a non-technical approach where, which is not optimal, but of course it is an approach where after testing positive, I try to remember who I've been in contact with the last 14 days, and they can be informed either by myself or, if I'm not well enough to do so, by a medical practitioner that they should come in for testing. So that's, you know, I guess we don't need to spend too much time on the non-technical approach, but that's essentially what contact tracing is there for, to see who have I come in close contact with. If I've been infected, that they're notified that they're in a higher risk category. Now, of course, there's a technical approach to that involving smartphones. So smartphones, as we all know, have the capability of tracking real-time movements. It's used in other contexts for proximity notifications for shops and things like that, if I've opted into such a service. And so basically using Bluetooth, smartphones are able to track our movement history. And in the context of contact tracing, we talk about creating a store of the data for all of the smartphone users for at least 14 days. And after someone has tested positive, everyone who's been in close proximity to that infected person are alerted that they're in a higher risk category and that they need to either enforce self-isolate, quarantine, or go for immediate testing. So that's the concept of contact tracing. Now, how is that being implemented? That's what I want to spend more time looking at. And I just want to do a check. I had I saw a note in the chat that some of the slides weren't visible. Can you tell me now if they're showing up okay?
Yes, it shows up as a full screen.
Okay, thank you. All right, so I'll continue. So I guess the first example, and this is a video. I'll play a video here about how China has implemented such a solution.
There's been a lot of talk about China's high-tech fight against coronavirus, robots delivering food in hospitals, facial recognition cameras taking people's temperatures, and drones enforcing lockdowns and quarantines. But what about the tech we can't see? China's sophisticated and controversial data surveillance system is used to track citizens on and offline. 健康码运用大数据监控后台大数据精密指控 and it's proving extremely effective during the pandemic. The mass surveillance network has taken the Communist Party decades to build. They've faced near constant criticism for it around the world. But as the world tries to get a grip on COVID-19, many countries are looking to the model for answers. Here's how they're doing it in South Korea.
They're using your phone to locate where you are, and then they'll send you an emergency alert if you're anywhere near where a confirmed coronavirus patient has been.
Singapore, Israel, Iran, Taiwan, and Russia have all adopted some or all of the Chinese methods to temporarily harness the power of data. More are expected to follow. So how does China's data surveillance system work? And how is it useful in a pandemic? It all starts with this, a national ID card. You need one to pretty much do anything in China. From buying a mobile phone to using any app, everything you do leaves a data trail linked back to your ID. In areas in lockdown, phone location data is being used to monitor movement and enforce curfews. If a patient is meant to be in quarantine, geolocation pings on their phone can alert authorities if they stray out of their homes. Phone location data is also being used to map exactly where that person visited in the 2 weeks before being diagnosed. A combination of human and automated computer analysis work out who they may have infected. If they went on a train and got too close to other commuters, a text message is sent out through one of the major apps, alerting those at risk. Every person is being assigned a coloured QR code depending on the risk they pose. Green, no risk. Orange, they've entered a potential virus hotspot. And red, if they've tested positive for the virus and could still be contagious. None of this cyber surveillance would be any good without the Chinese state's strict enforcement teams too. Police and volunteers have literally manned the exits of apartment blocks to keep places on lockdown. But in countries where these data surveillance powers are being brought in to help deal with coronavirus, some people are worried about the long term.
My name is Adam Schwartz. I am a senior lawyer at the Electronic Frontier Foundation. There is a great concern that when government gets new powers in a crisis, government never gives those powers away even when the crisis ends. So, for example, in the wake of the 9/11 attacks, the United States created vast new surveillance powers. 19 years later, those powers are still very much in the hands of the US government.
Adam and others also have questions about just how much of a difference this data surveillance can make.
Okay, so I'll stop the video there. It's just to have a view on there. So in China, very effective, let's say, according to official statistics, very effective at curbing the spread of the disease and getting it under control, and now already opening up to business, to some extent, business as usual, which is inspiring a lot of countries to look at similar systems. And there, but of course, with this kind of thing, it's certainly not a one size fits all. Some different parts of the world have different expectations about data privacy, data protection, and how invasive the state should be in such instances. Europe, for example, has a very strong stance towards data protection and privacy. So, of course, we look at the introduction of GDPR and the heavy infringement fines that are being implemented already. So there's a very different dynamic in Europe, and I think at this point in time, the fines there's about 272 cases of companies being fined for GDPR infringements. And just, I think everybody knows GDPR, but it's the general directive on privacy and private record. GDPR is general data protection regulation. And so they've handed out over 272 fines in the last 12 to 18 months, worth over close to $1 billion. So everyone from Google to British Airways to Marriott being hit with very large fines for breaches of data protection. Now, in extreme times, of course, you might say, well, these times, the rules could be broken or stretched or whatever, or modified to deal with a crisis. But I think, as was highlighted at the end of the last video, there's always a risk of that once such concessions are made to deal with adverse scenarios and adverse market conditions and health, the health situation that's swept across the world. But then there's always the risk that those powers that are let's say, set aside or implemented and the rights and protections that are set aside for what should be a temporary time become permanent. And that's why in Europe there's a lot of efforts to put in systems that still respect the privacy of the individual, especially for their data. One such initiative that's set up is the pan-European privacy preserving proximity tracing, kind of a long word, but the key, what they're focused on is creating guidelines and frameworks and in some cases tools that will ensure that any solutions that enter into Europe have as design principles that it's voluntary participation, that the solution provides for anonymity, information that's what's not included is geolocation information, that GDPR is fully complied with, and that any solution that's launched is fully tested and certified by security professionals. So this, the PEP-PT is something that's been set up in Europe to, let's say, provide a lot of standards and guidelines on how such apps should be built. So that's, then if you look at with guidelines in place, a lot of there are several communities that have formed to very rapidly deploy, let's say, European solutions. One example is from disposable identity as a service, as an example. If you're interested in joining, they have a very open community. The Telegram link is at the bottom. The GitHub repository is there as well on the slides. And we can provide that if anyone's interested, just let BFB know and I'll send you through the information. But again, kind of similar, a little bit more granular now. So the way that the system is designed is using the concept of decentralized IDs. But it adds another element to that, and that's that they're one-time and disposable IDs. Because one of the biggest challenges with having unique identifiers for individuals is that once you have a unique identifier, it stays with them. So they've taken this concept a little bit further and said we have they'll have one-time disposable IDs. And so when I then enter into some kind of a relationship where I'm sharing data or sharing information, that's used, that one-time disposable DID is shared with another party. The relationship verifiable credential is created with that other party. And they are in legal control of the data that I shared with them. And they have a legal proof that there was a connection between that individual and the organization. Now, the person at any person at any point in time can exercise their rights under GDPR, and that specifically, one example is the right to be forgotten. So, and at any time and I think the final one that's really key to the design of this solution is that it uses self-sovereign principles at design level. So any person who has a one-time disposable ID, they can at any point in time delete the disposable ID, but they can always cryptographically prove that this disposable DID was generated by their persona. So they're able to really be in control of their data and how it's shared and how it's used. So kind of, I'm not going to go too far into detail on exactly how that works. But of course, if you join the Telegram chat or if you're technically inclined, join the GitHub repository, you can get up to date on what they're doing and how they're doing it. So what they aim to do is create a protocol for that will power these kind of tracing, proximity tracing applications, but do it respecting the individual data protection principles and being 100% GDPR compliant. So there's all these, and this is just one example. There's several others across Europe that are coming up, and it's not just Europe. A lot all around the world. Saw a really nice use case the other day So no matter, pretty much every country has these grassroots or community-driven initiatives that are set up to offer an alternative to a very centralized system, going for decentralized technologies that enable a self-sovereign approach to the identity, and building in at protocol level the respect for the individual data protection and privacy rights. And of course, it's not only grassroots initiatives that are looking to find solutions for proximity tracing. Apple and Google announced last Friday. It's kind of strange to see a new logo there, but this is the logo attached to their press release. We got Apple and Google announcing that they're going to work on a contact tracing app. So you download the app, assign each user who's downloaded the app gets a number. All of their movements are tracked with Bluetooth, and so forth. So not that different than what you saw in the previous slides. Now, some of the issues is that when security experts are looking at the approach they had outlined, but of course, when you're uploading data from a device to a cloud server, there's an IP address at the time of transmission. The second thing is, and it's not only for the Google Apple approach, but Bluetooth is quite binary in the way it works, in the sophistication of the messaging. You've got in proximity or not, and the challenge there is, the Bluetooth works on a 30-foot basis, more or less, a range, whereas the guidelines from public health officials are between 1 to 2 meters, or 2 meters as a proximity, being if you remain 2 meters away, then you're safe. So there is a potential, if that's not taken, if there's not a solution to get away from a more binary approach, that there will be a lot of false messages sent out, which could, let's say, prolong or make it more difficult, or increase the requirement for additional testing or something to that effect. But I think using Bluetooth seems like the best solution, but it does have its drawbacks. And of course, this is an app that you download. So it's only going to take into account infected users who have self-reported that they are positive, and so forth. But that's not specific to Apple and Google. That's more of a general type approach when you have an opt-in model. Now, there is a bigger concern that I think some people have related to this initiative, is that Apple and Google have positioned themselves quite effectively over the past month, or let's say 4 to 8 weeks, to have a complete monopoly in this domain. Now it was, all of these articles are from at least a month ago, where Apple and Google have been rejecting coronavirus apps. So unless it's coming from a health organization, it's almost impossible for developers to get apps that would compete with Apple's solution and Google's solution into the App Store, into Google Play. So they've carved out a bit of a position, protected the market, and then a month later they announced that they're going full speed into it. So it's a bit of a lot of questions we could talk for hours, I'm sure, about that, but let's not go there in this webinar, unless we maybe in the Q&A session. All right. So that's what I've got. Now there's let's call this the unintended benefit, the third use case. I should mention, I've just been messaged that there is one of the leading figures behind the use case that I mentioned, the disposable IDs. His name is Jeff van Bokrijk. He's in the call as well, and he's more than happy to field if there are additional questions about disposable IDs. I made a high-level view, but Jeff is on the line if anyone else would like further information or would like to get involved. So that last bonus case is the unintended benefit, the lighter greener note. If we look at CO2 levels, during what happens to CO2 levels in times of lockdown and forced restrictions in movement, the trees start to breathe again, which is a nice side effect and benefit. But I'll then hand over back to you, Susie.
Thank you very much, Matthew. That was very interesting. So just a quick recap on all this that we're talking about. So helicopter money provides direct and immediate alternative to another wave of QE. And each country must respect the expectations of its citizens regarding data privacy. And remote working is good for the environment. I think that's that'll be on the end. Thank you, Matthew. I'll hand it over to Dr. Hilal to continue the next part.
Yeah, thank you very much. Hi, how are you?
Good, thank you.
So would you like to ask me some questions?
Yes,
or
I will be asking the questions. From a cryptographic perspective, Doctor, what are the advantages of decentralizing the distribution process?
Yeah, see, when we talk about decentralization, and I mean, here we're focusing more on the power of blockchain, which is mainly taking its power from cryptography, which is taking its power from the trust in mathematics and the complexity of solving really very complicated mathematical formulas and equations. Decentralization is like referring to the blockchain, the stock, and it's really it opens a new world of possibilities that shift the control to individuals. If we look at it from a very simple perspective, like it's a combination of the public ledger of the blockchain, which is a distributed, decentralized system that bring efficiency because we can do a process re-engineering of the whole distribution process, and definitely it reduces cost because we can eliminate many of the checkpoints and many of the processes in between. This is number one. Number two, we're talking about transparency because of this public ledger is like the same copy of the ledger is available with everyone. So this provides quite a very good incentive to the participant in this network, to the citizens, to do really to do good behaviors and be quite honest in the way they interact in this process. Third one is like because of the advanced cryptographic primitives, and cryptography is like being for a long time, but now it's becoming much more relevant because we're talking about a system that's built on cryptography. And I can mention the digital signature, for example, because I need to make sure that the guy who is transacting is the guy who claimed to be transacting. So authenticity of the transaction is there using the cryptographic primitives used for digitally signing any transaction, in addition to the hashing that serves immutability, so that no one can even tamper with any record in the blockchain once it's stored, which will really help the people trust that any information in the blockchain is like this is a truth forever. Nobody can ever change it. Definitely now we're talking about the blockchain with the current cryptographic primitives, which will definitely develop in parallel. We will see a lot of development in the blockchain space, and the same will be applied to applying much more advanced cryptographic primitives just to serve the objective of these very well developed blockchain.
Yeah, and what about privacy preserving and tracking and tracing? I mean, can you tell us a little bit more about that, because I think that's something that people want to hear about.
Yeah. Now, definitely, Matthew, he covered this very well from different perspectives. But let me cover it as well from cryptographic perspective. Yeah. Now, really, it's amazing to see how coronavirus, COVID-19, is really it's very obvious that it has a very advanced power over human beings. As human beings, it takes really years and years for a technology to become a mainstream, because humans are trying to push and there's a very high resistance, and the priorities is not there. But with coronavirus, we're seeing many technologies that like moving, switching in simple overnight. So to start with this, when we look at the concept of privacy, preserving, contact tracking, as Matthew mentioned, in China and Europe, I mean, it's starting very fast because there's a huge need, and we see what Apple and Google did in their announcement, and this is only the start. So it's used in principle. It's used where there is a possibility of an infection between, let's say, I don't know if you're seeing my screen. Let's say Bob and Alice, In cryptography, we use these two guys together because we refer to them in our description. So if none of them are infected, their privacy will be preserved. But if let's say Bob is infected and he becomes near Alice with like predefined distance, let's say in the case of COVID-19, we're talking about 1.5 meters. But this is not, the count is not only limited to COVID-19. God forbid, we don't know what will happen tomorrow with another virus. But this is a technology that will help everyone. I mean, in every single scenario, to make sure that using the mobile phone, using the Bluetooth technology, which is using what's called signal strength analysis, just to measure the signal strength between two Bluetooth devices, two mobile devices, between Bob and Alice, and see if the distance is really crossing a certain threshold. And definitely both of them, they use what's called anonymized identity. Now, the method proposed by Apple and Google is to have 3 different keys. These are like mainly cryptographic keys. One of them is called tracing key. The tracing key is mainly produced or generated just once per user. And we have what's called daily tracing key. And we have a number of rolling proximity identifiers. The tracing key is a unique key per user. It's a 256 bits that's generated randomly, and it will be the key that's stored securely on the mobile phone of the user. So it's a cryptographically secure, stored on a very specific area on the mobile phone, which is we call it tamper resistant. So if people try to take it out, they won't be able to figure out this key. And actually, it's very dangerous for anyone to learn about this key, this tracing key, because if somebody was able to get it, he can easily spoof the identity of the person. Then you know, there's every day for, let's say, my mobile phone, I have now my tracing key, but every day there will be a new key generated, which is associated to the day. So they use in cryptography something called, it's a hashing algorithm that takes the tracing key and in combination with the day, with the current day, and it produces another key called daily tracing key. This key will only be exchanged with a third party, with a trusted authority, just in case I am infected. So if no infection takes place, if I'm clear from COVID-19, this key, the second key, will not be exchanged with what's called this authority that had take care of the healthcare and the country. Now, then after, let's say, God forbid, the holder of the mobile phone is infected, this key will be stored now with this authority, and then for every 10 minutes, this is a definition for now, but I mean these are changeable. There will be a rolling key. It's called rolling proximity identifier. So whenever anyone gets close to me, the two mobile phones will identify each other, and this information will be stored even on the healthcare authority. And definitely, when this guy is getting close to this guy will be aware that this guy is infected, right? So the good thing that these are done in a very light version using hash algorithm, using cryptography, and stored securely. Now I cannot claim that I've really studied the whole concept of what they did in Google and Apple, but I think it's a good start. But definitely, if like we go into more details, maybe there could be some vulnerabilities here and there. But in principle, it's a very good start to see how we use the mobile application mobile phones with a very old technology like Bluetooth to really save the world and combat this widespread of COVID-19.
Thank you, Doctor.
Yeah, thank you.
Thank you, Matthew. I guess we can open up to questions. We see some questions on the poll. I think you also have access to, the questions. One is directed to you from Lama, Dr. Halal, if you can see it. I think the video
the question from Lama was...
Yeah, thank you for this interesting webinar. It's to you, Dr. Sain. Please, where do we stand now regarding the crypto SDRs to finance SDGs and IDB countries project?
Yeah, thank you, Dr. Lama, for asking this question. Actually, it's like, as I mentioned, IMF is moving in this direction, is exploring this option with its member countries. What we are as IDB, what we are as IRTI member of IDB, what we are working on is like slightly different version of this SDR to target, as I mentioned, the SDGs. So the next step is like we need to talk to the other MDBs because I mean I did not went into details, but the details like part of this cryptocurrency will be given to the MDBs because MDBs they are very much experts in distributing this money in a transparent way, in a very targeted way, because these are smart money, so it's programmable, as Matthew mentioned. So we are now we are preparing the proposal, and the next is like we will be talking to the other MDBs in collaboration with IMF, and then to move it forward. But I think the plan is to move as fast as possible, because things cannot wait, and all the other MDBs are like really waiting for a very good solution to move forward.
Okay, great, thank you. Matthew, I think there's a couple of questions there maybe for you.
Yeah, yeah. So thanks, Jeff. There's very more of a statement rather than a question, I think, but it's indeed interesting to look at how with the level of programmability when you're talking about tokens, you can combine different concepts like the Gessel coin, which has a negative interest rate, therefore depreciates in value over time. Combine that with a purpose-driven coin. So you've got a stimulus package that has a 4-month time frame that's valid within. Either it depreciates to 0 at the end of the 4 months. If you haven't spent it, it's gone. Or over that 4-month period, there's an increasing monthly decreasing monthly value of the tokens I received. But I can only spend it for a specific purpose. Indeed, there's so much you can do. It's basically, if you can, whatever you want to model, you can essentially do with programmable cash. So very flexible, and again, the smart contracts to set up all the rules for it and put those onto a centralized network. And you have a system that's fully auditable by everyone involved and executes according to the design without any intervention. So it's can set up a very let's say, impactful and efficient means of distributing cash.
Well, thank you, gentlemen. Thank you very much for your time today. I don't know if there's any more questions in the panel out there. I think we've answered most of them. If you have any questions, please feel free to get in touch with us. Our email is on the email that we sent to confirm the time, and as well as your registration confirmation. On behalf of Bahrain FinTech Bay and FinTech Consortium, thank you so much for joining us. Matthew and Dr. Halal and everyone out there that's watching and listening to this. Please stay safe, and again, contact us if you have any questions. Thank you very much, everyone.
Thank you very much. Thank you.
Thank you, everyone. Stay safe. Bye.
Stay safe.
Thank you. Bye-bye. Stay safe.